Hey guys, let's get into the recap here. So, started market open, we came down and we were down in the RSI. It's one of those, market open types of plays. So we decided to go 2 contracts long. Was willing to give up $600-ish, but really, that was a mistake. Starting off negative the day really takes a hit in your mental capital. So, it just wasn't a very smart play to start off the day. But we took it, so we had to come back from it. You see, what I was looking for was a RSI divergence, but we just kept coming down. I did a quick play and it got $200 back. I didn't need to close it off that early. It's just my ATM hit, and it was too fast for me to adjust my take profit. So, I mean, it's profitable. I'm not going to complain about it. We got $200 back, so now we're at 400. Here, I'm taking a short. One of the things you're going to find in the next few plays is that we're kind of just trying to play breakouts. And as you saw, if you were trading the market today, we were in a range for pretty much all, like the first half of the day. So that pretty much, we shot ourselves in the foot trying to play breakouts. One of the things that we teach in this channel is, don't play breakouts, play retracements or pullbacks, right? So here, we made another play. It was slightly profitable. We went in again because we thought we got out a little too early, but going back in wasn't exactly the best play there. We should have just waited until another entry. I think the reason why we wanted to play this out and continue into this play was because we were just trying to get out of the hole, right, that we got ourselves into in the morning. So, that's going to be the theme for this episode is mental capital. Every single time you enter a trade, you're giving up even more mental capital, whether it's profitable or not, right? You're giving up mental capital, so you really want to save your mental capital for quality plays. Here again, trying to play the breakouts, right? And instead, it's not going in our favor. So here we gave up, and now we're down $1,300 again, right? Here we are playing up to 5 contracts. It ends up working out. We take some profits. We ended up take out 1. So we are at 4 contracts, now we're at 3 to secure some of that profit. And really, we should have sold at the line, because what's happening here is, we have a trend line that broke, right? And then we came back to retest, which eventually signals that we're going to go back up. At this point, look at that. You see how it went back up? That was our sign to sell at the. So here again, trying to play the breakout look, trying to hit this breakout, and it does break out a tiny bit, right? But these are the types of plays that can go one way or the other. It's down to 50-50, and we don't want to take plays that are very much 50-50. We want to take plays, right, where we have a high level of confidence. So here we are again going, long. We're up in profit for the play, and we take it. So now we're down at 375. Here we are playing a retracement. It just doesn't really go our way, It keeps going down lower and lower. And at this point, mental capital is pretty low. So eventually we see this go down to I think the 300 or 400s, and we close this out if I remember correctly. Yeah, there we go. You see, we're at 400. You see, we close that out. So again, we're not taking quality plays really. We're down 975. We just can't seem to get out of the hole, right? Here again, once again, trying to play the breakout right to the bottom, and it costs us, right? I believe at one point we did kind of break down to the bottom and we made some profit. I believe this might be one of that play, or maybe not. Maybe this one comes and bites us in the foot again. Yep. So here I am trying to decide, okay, if this is a trend line break, or is this just a fake out before we go down to the bottom. So I hold for a little longer. And then we close out. And I'm kind of glad that we did close it out, because, it would have kept going up. There, I'm trading. As you can see, I'm starting to trade more contracts, and that's not what we want to do, right? I'm trading contracts now because I'm trying to get out of this hole. I also have a work meeting that's coming up, and I'm trying to end positive for the day, which we do end up positive, and that's a good thing. But the way that we got there isn't something that I would be very proud of in terms of a trader. So here I am, five contracts deep, trying to get out, thinking, we've done our retracement, we broke out of the zone, right? We've made a higher high, so now we're coming down low for a pullback before we go up. So here I am, 5 contracts. I will say that I start getting confidence in this trade, that we're going to go for a higher high. Yeah, so this one was a longer play. Eventually, I believe I end up adding 5 more contracts, trying to really scalp this out and get a quick win, and get us out of this hole and then some. So here we are, it's playing to our favor. So if you look on the 5-second chart on the left, it's looking like a flag pattern, right? So that's why around this time is when I add another 5 contracts, thinking that we're gonna have another jump up, but instead we kind of dwindle down, to the point where I think we were negative $2,000 in unrealized P&L. Yep, right there. And we were so close to our drawdown. This is an evaluation account, so it was not good. It was a stressful situation. The other thing is, as you know, this is me doing evals after so many months of not doing evals, just playing my PA and live accounts and my personal accounts. So after a while, especially playing with this size, which is what I'm used to in my personal and live accounts, I forget that we're playing evals, and I forget about the drawdown, which I don't have anymore in my accounts. So here we are, it's starting to pay off. I sold 5 to to get that profit, and really, if I had more time, if I didn't have that work meeting, I should have held, because as you guys saw, we completely took out the highs from the morning market open. Easily, if I would have kept maybe the 5 contracts or so, I don't know, somewhere around $6,000-7,000, maybe even more. But in hindsight, everything is perfect, right? So here I am. I had taken out 5 to take profit. Now we're at 885 realized. But then greediness starts kicking in. I see that I still have about half an hour before my call, and I try to scalp this thing out with 5 more contracts. So now I'm 10 again, going down to $2,000 in unrealized P&L. So it's just things were not executed correctly. Yes, we were on the right side of this trend, going up, but in terms of how we executed, many times we were earlier in terms of our entry than we should have been. It wasn't a really good trading session. Yes, we walked out positive, thank God for that, but it's just this is not the way that I would do things in hindsight, right? Of course. So here I am, still 10 contracts deep, trying to ink out maybe another $1,000 or so to get close to $2,000, our $2,000 goal. And yeah, so we're hovering around 800, 900. We have a little pump, and then I close it out at $1,755. That's of course before commissions, which we're about $200, so really about $1,500. But let's just call it $1,755 for now. At the end of the day, it's an eval account, so who cares about commissions? We're just trying to make the profit goal. So yeah, I would give myself kind of a C- here in terms of execution. It's still a passing grade, but not something that I would be terribly proud of. So anyways, guys, hope you guys learned a little bit about this. The main thing is, well, actually 2 things. One is mental capital and the types of plays that we're trying to take, right? If our mental capital has been expensed, and then at the same time we're trying to play breakouts instead of trying to play retracements, right? We're going to end up paying for that, right? And our execution is not going to be as good. So that's the takeaway for today. Join me tomorrow in our live session, and then I'll be doing a recap on that as well. Hope to see you guys there.